Hi, my name is Spencer Liu, and today I'm going to talk with you about what is margin. Margin's just basically taking a loan out on your securities. In most cases, it's stock. So all you're doing is you're just going to take a loan against your stock portfolio, and what they usually allow you to do is get up to 50%. So for example, if you had a portfolio that was worth $100,000, you'd be able to receive $50,000 on margin. And you can use that $50,000 for whatever you want. You could buy more securities with it. You could fix up your house, whatever you want to do. There's a catch, however. The catch is what's called a maintenance requirement, and for stocks it's usually around 30%. So 30%. So let me explain how this works. So when you start out, your portfolio value is $100,000, and let's say you take out the maximum, or $50,000. So if you just subtract those two, you have an equity of $50,000. And the minimum equity is just 30% of the value of the portfolio, which would be $70,000. So everything looks good right now. You have no problem meeting that minimum equity. The real problem comes is if the portfolio, let's say it goes down 30%. So now the portfolio is worth $70,000, and you still have $50,000 of margin. So the equity is $70,000 minus $50,000, or $20,000, and the minimum equity required is 30% of the $70,000. So now you need to have $21,000 of equity, but you only have $20,000. So what's going to happen is you're going to be required to put $1,000 cash into the portfolio. So that's one. Second option is you deposit security. The second option is that you add about $1,400 of securities to the portfolio, and how I got that number, I rounded, but it's just 1,000 divided by 0.7. Or you have to sell $3,300 worth of securities to cover that margin call of $1,000. So this is the real risk of margin, is that you're forced, if you don't have the $1,000 cash, or if you don't have more securities to add to the portfolio, you'd be forced to sell $3,300 worth of securities, and guess when you're selling? Well, you're selling when the portfolio is down. So that's what margin is, and those are some of the dangers of margin. Thanks for watching. If you have a moment, please read these important disclosures. I'm Spencer Liu, the Finance Guy.